Hi, and welcome to this week's Market Insights, where we break down the key economic events that could impact the financial markets in the week ahead. Now, with major announcements coming from Australia, the US and Canada, along with corporate earnings, traders should brace themselves for some potential volatility. So let's dive into the details. First up, on Tuesday at 7:30am GMT plus 3, the Reserve Bank of Australia will announce its interest rate decision. Now, most analysts expect the central bank to keep rates unchanged at 4.1%. However, the bank's commentary is going to be crucial. With inflation easing, a rate cut could be on the table as early as May, right after the upcoming election. Now, recent data revealed that Australia's inflation rate is slowing. In February, the headline inflation dropped to 2.4%, slightly lower than the previous month. More significantly, the RBA's preferred inflation gauge, the trimmed mean, fell from 2.8 to 2.7%. Traders should pay close attention to any hints from the RBA, as its guidance could trigger significant moves in the Aussie dollar markets. Okay, now let's head to the US. And the Federal Reserve's next meeting isn't until May, but Friday's job report at 3:30pm GMT plus 3 could still shake things up. Now, government efficiency measures, trade war concerns and rising bankruptcies could all impact job numbers this month. Some analysts predict these factors will start reflecting in the payroll data from March. Now, job growth in February was weaker than expected. Nonfarm payrolls increased by 151,000. That's better than January's revised 125,000, but fell below the 160,000 forecast. The unemployment rate unexpectedly rose by 0.1% to 4.1%, missing expectations of remaining steady at 4%. Now, as a result, the US dollar weakened against other major currencies. Will the pattern repeat this month? We'll stay prepared for potential volatility, and don't forget your risk management techniques to navigate potential market swings. Let's move on to Canada. And on Friday at 3:30pm GMT plus 3, Canada will release its unemployment rate for March. Trade tariffs are expected to put pressure on Canada's economy. In fact, the National Bank of Canada predicts unemployment could rise to 7 to 7.5% in the coming months. That would likely push the Canadian dollar lower. Now, in February, the unemployment rate stayed at 6.6%, defying expectations of a rise to 6.7%. But job creation was weak. Only 1,100 new jobs were added, far below the 20,000 that was expected. This caused the Canadian dollar to lose value against other major currencies. With new trade tariffs on the horizon, volatility could increase and the Canadian dollar could well come under a lot more pressure. Okay, and finally, aside from economic data that we've already spoken about, corporate earnings reports from major companies could also shake the markets up. If earnings beat expectations, stocks could surge. If they fall short, of course, you can expect some sharp moves potentially on the downside. Traders should stay alert and keep themselves informed and use solid risk management strategies. Well, that wraps up this week's Market Insights. Unexpected economic data and geopolitical events can lead to higher volatility, and of course we are during a period of time where these things are becoming quite regular. So staying informed is crucial. For real-time updates and expert analysis, visit the news and analysis section on our website. Thanks for watching, and we wish you luck with your trading in the week ahead. Bye for now.